don't realize is that when you really are a mortgage broker built for the community, you have to be there advising people regardless of the circumstance, not just because it's like, everyone's excited to get the keys, but we also have to make sure that when a cycle happens, like we're having right now, that there is a resource for our homeowners.
Yeah, and we talked about a couple different like approaches that you guys use, and we're going to be talking about a few things today, like forbearance or refinancing, maybe even a case study if we do have the time at the end. But it really reached out to me that you guys were using a data-driven, not just a qualitative approach of what you're seeing and talking to people, but what the numbers actually say. And you guys subscribe to a few specific data points and newsletters that can give you a lot of that insight. Correct?
Yeah, so two things that, like we recommend everyone to do is we are, because of the statistics, not by any choice of our own, over nearly 60% of all home buyers are currently under the age of 40. That's a rough statistic. So it's becoming like, we call it like the millennial market. It's got pros and cons. I'm a millennial, but sometimes I don't even, sometimes I do have my own reservations about working with my own millennials. So, but it's good, which is good and bad. But what's fun about it is that we basically have sat down, and we've been doing this for years, but we thought there has to be a better speed to customer, a better speed of information to customer. And so one thing we did this year that was a little different was on our Instagram, which I know isn't, maybe like widely, like, totally the best place to find financial information, but it's something that I can at least get people to commit to equivalent of 3 PowerPoint slides per day that will make a meaningful impact in your financial decision-making each day for real estate. And so the first slide is simply, we just tell you to lock or float. I know that's financial advice, so we have a disclaimer that, we're not Series 7 licensed. That's more of like, financial advice, and that's more Brett's field. But we can generally tell you our opinion, like as a licensed loan officer, I can say, yeah, this is generally the data, and this is generally our opinion, float or lock. The second point is that we actually tell people kind of like a rough review of what happened in the market, bonds, what's happening and how it impacts mortgages, and one paragraph of what you can read about what happened today in the mortgage industry. And so that way there's a lot more transparency, and so that there's a lot more clarity for the customer, so that when they do come and work with us, it's not like there's a hidden fee sheet, or like there's like a hidden know-how of somehow that we know more than the customer. So we want our customers to really feel like they're informed.
Yeah, and we've been putting out a ton of content on Instagram too. It's really kind of made a lot of firms pivot to different social media platforms as we all adapt on how to communicate with clients or what the clients are platforms they're on themselves, so that we can get information across to them that they're asking for. And you guys are just at Loan Brothers on Instagram, right?
That's it. Yeah, thanks for helping me out on that one. It's just at Loan Brothers. And so, yeah, after Christian and Cubie. So, and reality is that we're all brothers in our company. We have girls that are the brothers on the team. So we got quite a big team here for you.
Yeah, and we're just at Gerber Kawasaki Instagram, or at B Sifling. We print out a lot of content every single day on there. Is there any other data points that maybe are really encouraging right now, or maybe discouraging where we're kind of heading?
Today it's so interesting because it's such a I heard this 7 weeks ago that when we were really going through some tough changes in the market and kind of accepting that this was going to be a real shift in the market, was that I heard the word fluid. Like it's a fluid situation, it's a fluid market, and so I think that's like kind of like become like the word to use. So I will say that it hasn't changed. I will say that it's become more important now more than ever to have advisors, because the impact of making a decision right now is actually going to set you apart from everyone. So just having some meaningful information, it's a little bit higher quality, is going to go a long way with a financial advisor, whether you're getting it from your mortgage person. The two places that we really trust data is actually not like news sources. We only have three real resources, or four at the very at most. So one is three people, I would say. Anthony Casa, he's the chairman of the Association of Independent Mortgage Experts. So he has a consumer first mindset. Just this morning, I asked him, I said, like, hey, like Anthony, he's the head of our broker association. He's got, 70,000 members, but I texted him and I said, look, Anthony, like I want you to tell everyone a quote right now. Like, I need you to tell me, like, what would you tell a consumer right now? And so I'm just going to read off my phone. And he literally said, save your money, keep growing. We have 18 months of low rates ahead of us. Now is not the time to buy too many houses, too many cars, go on too many vacations, upgrading things. He said, right now is the time to really realign, really assess your spending, and just save, invest, and grow. And he says, and you'll be able to relax in 2022. And I really enjoyed that, because I thought he's so poised, like he sent me that in like 2 seconds. The other person we follow is Habib. This morning, he had more of a sobering message for us, where he's an economist. He's really kind of like a really interesting, very, very knowledgeable person. We pay for his system. He actually this morning released that the housing data has indicated, and this is through Black Knight. So Black Knight is one of the resources we use for to the source data, that foreclosure and forbearance has increased by 3.5% this month. And what's interesting about that is that the last time that happened at such a high rate was in 2008. And so it is important to understand the seriousness of that, and what it can mean for the market. Does it mean you do nothing? No, it just means that in any economy, whether you're a Republican or you're a Democrat or whatever you believe in, smart people always find a way to win. That's our saying. And people who are informed, they always find a way to win, regardless of their politics or which side of they think the economy is going to be on. So.
Yeah, and I really want to stress the point where you made, where like working with an advisor can really impact your decision making when you're going through things like this. So a lot of the millennials' parents, for example, they taught us basically, hey, get a 30-year fixed mortgage. That's the way to go. You want to pay it off as fast as possible, and that's the end of the line. And because interest rates have been going down basically since the 1980s and are practically at zero at this point, that's a lot of times not the case. And so, when I'm helping people buy a home, whether it's a year from now, a couple years from now, 5 or 10 years from now, we're definitely also helping them figure out, what type of loan they should get with people like Cubie, so that they can make that best decision, whether they're going to be staying in that house for just a couple years or over the long term, so they can truly make each dollar that they have, whether it's in the investment property or in their portfolio, to grow and grow over time significantly. So it's super important to be working with a professional when you're making these major life decisions like this, because if you do get caught in a situation where you could have taken much more advantage of the market, you're going to be kicking yourself in a couple of years.
For example, last night we had a young guy on our team. He had a long day. He had a lot of extra appointments he took, and it wasn't a great day. I talked to him in the morning, and he's like, I'm on my way to success. And I was like, well, the thing is that these times reveal people who are making good choices. And so if you have a proactive approach, you're realigning and you're just preparing, doing your best. That's really all you can do. Really, sometimes an advisor is really just maybe someone who you're able to hear yourself back and really determine what it is that you want. And I always tell my clients, I'm like, look, I'm just giving you information. I want to present, reason. Like, this is a good, if you want, I can share a little bit about the case study if you want, an example of a really good example this morning. I like to use like real examples, is that we had a client where in his circumstance, he was deciding whether to look at a 2.75 interest rate in one hand, or a 2.99 interest rate, and they're both 30-year loans, okay? And the difference in cost between them was that our 2.99 rate was almost no cost. And that means that the rate and the APR are very closely matching one another. Okay. And I can elaborate at some point more on that, but for the sake of the conversation, I'll keep it moving. And the 2.75 rate had a cost. And so there would be costs added to the loan. The other loan, much less, if not no costs added to the loan. And so we were looking at just a 0.25% difference in the rate. And it was interesting because he was coming down from 3.8. He said, I thought this was a really great rate at the time, but last year, 3.8 is an awesome interest rate. Now it doesn't feel so great, when I'm hearing 2.99 and 2.75. So what was interesting is that when we looked at that, I told him, what's really funny, as I said, and it doesn't take a rocket scientist to know it. I said the 0.25% between 99 and 0.25, that's only an extra like $70 to $80 a month on a mortgage of around 500,000. It's like, you're not talking about a lot of money. All your savings was from going from 3.8 to 2.99, right? Like that was where all the savings was. The last quarter is really where people misstep, is what I call it. Because instead of just going to a very low rate, they go too aggressive and they get sucked into paying points. And I think a good exercise is when you talk about like in finance, because I'm a little overeducated for my job. I know not a lot of mortgage guys or finance majors, but when I was a finance major, they have time value of money. Lenders and bankers want to charge money because time value of money is that they got paid faster today. They got $7,000 today in fees for the 2.75. Over time, they're only giving up a 0.25%, but they got $7,000 today. 2.99, they don't have the instant profit. They're waiting for them to realize their profit over the next time. So even during these times, if you can, I'm encouraging people to do as low of a cost of a loan as possible. And I tell people, and then invest the difference. If you take $7,000 today and you invested in something meaningful with Brett, I have a feeling it's going to do a lot more for your portfolio than maybe something that's performing at $80 appreciation per month. That's not really a good investment with $8,000 or $9,000. I think you would really be outperforming something when you invest the difference. So it's sort of, I can spell that out, and I don't mind making a PowerPoint if someone would want that, but
it's a great point. And, a point that we make to a lot of our clients, if they're in that situation, because interest rates are so low, well, the stock market averages about 10% a year over the long term. And you don't even actually have to invest all your money in the stock market, right? Because stocks are generally pretty risky. And if that's money that you wanted to be saving, then maybe you do half in stocks and half in bonds and still earn half that return, and still is generally over what you would be paying. So it tends to, obviously it's a little bit more risk involved with the entire thing. And you have to be okay with that with your own personal financial situation. This isn't for everyone, but it's an excellent strategy and something, again, that, didn't make sense when interest rates were 20 years ago when they were 10, 12, 15%.
Yeah. I agree with you, Brett. I have nothing to add.
Well, what about like if, the picture isn't so rosy for you and maybe you are looking at this forbearance issue and you're already in a home, what advice are you giving to people in that situation?
Well, every recession is different. I know that this is more a recession led by, I guess you could say in some ways it's sophisticated, but you could say medically led recession in a way, because it's COVID-19 with a lot of underlying other issues. It's very complex. The last recession that I was a part of, because I was working through that, and I know I'm young, I know in terms of being an advisor, I'm on the young side, but I will tell you that going through 2007 was one of the toughest things that I've experienced with my brother and with our family as mortgage people, because it was our recession caused by the mortgage industry. Right now, this is different. We're not the first into the fire, as I say, but it does affect everyone. I think right now you have to look back, and to answer your question, you have to look at every recession requires a similar formula, like just the way you do an order of operations in science. is that you have to have a similar formula to what we did in the last recession. And so if anyone even needs resources, we actually will instantly like mail anyone a free book about what all the meanings and definitions are during a hardship, as you can call it.
That's awesome.
Yeah. So anything you need, like there's no limit we'll go to, because if you keep someone in their home, that's extremely important to the local community. It directly benefits us. I tell people to help everyone. So I'll tell you that if you want to really look at your finances, and this is pretty rough. Okay. So this is like, I want to give like a takeaway. So this is kind of rough, but I would say that you look at some major bills as a homeowner. And let's just say you have a standard home loan where you pay your taxes and insurance on your own. You have personal expenses. We got the 10 years ago, I never would expect that everyone would have a Netflix account, that everyone would have streaming services. You look at your expenses, and subscriptions have sort of like creeped up on us. It's sort of like a really interesting underlying factor that I don't know why. Right?
We cut the cord and then basically rebuilt our cable bill with a bunch of different sub-services.
It's true. It's actually true. And it's actually become more, we're actually seeing that it's becoming kind of like a problem, because we don't analyze people's subscriptions for a home loan pre-qualification. And to me, it's a little bit, unless it's a major expense that we catch, because we can catch it on the bank statement, like let's say you're paying your car for a friend, or you're on a cosigner for a loan. We do catch those things, but subscriptions are sort of tricky because they're all really small, but they creep up on you. I think that if you were going to sit down and really look at your finances, I would say that one of the best bills you can start with this coming at the end of the year is actually, surprisingly, the property tax bill. And I know this is going to be a little bit strange and unpopular at first, until you hear out my.
It was a little radical when I first heard you say this, but it does make sense.
Well, yeah. Once I explain it, once I land the plane, it makes sense. But really, simply put, is that you have a credit report, right? And you have all the stuff that reports to the bureaus. Those things affect your credit. One of the most important things is to look at trying to come out of a battle not all torn up. I tell people, like, if you go through a fight and you come out of it and you have both your legs are broken, that's not ideal, right? There's certain things you want to try to come out of a fight with. So if you're coming out of this recession and you're kind of putting on your armor, you want to try to preserve your credit, because it's going to be one of the best ways to bounce back following an economic downturn. So the longer you can preserve your credit, the better. The only bill that I've been able to identify is the property tax bill and subscriptions as the only things, like, technology subscriptions, because the tech companies, they're not organized yet enough to actually report collections. It's kind of fascinating. Like, they're not sophisticated enough, like Capital One, to report you to collections as quickly. So,
or it makes sense that they would just shut it off, right?
Or they just shut it off. They just cut you off. So the point is that, you can kind of keep it going, and you can, to your point, Brett, yeah, like, keep it going, but you have to sort of choose, in my opinion, preserve your credit first and foremost. But more importantly, be responsible. There's a way to actually pay back the property tax bill. Right now, they're forgiving all of the penalties. And the county isn't coming out and telling people this, which is a little bit, it's a little disappointing. I wish that they would be a little more forthright with the fact that, they don't need the money, like, they'll be okay. Like, I think the Orange County and Los Angeles County and these counties will be okay if you're making a very serious decision as a family. But they will give you a path to repayment. You can be delinquent for 5 years on property tax before you can be foreclosed on, and it does not report to your credit. So I'm not trying to, isolate them as the guys to go after, but I will say that if you are in a hardship and it's a very serious situation, do your best to repay everyone. But if you can't, that's a good place to start, so.
And Cubie has this very, very unique superpower that he told me about, that he's really, really good at filling out all of these government forms, because everyone knows that they're super, really easy to navigate. As I'm sure if any of you guys on here have ever filed for unemployment through this or anything like that, city and government forms and county forms are not easy. And so, working with someone that can navigate through those and save you time is definitely worth it.
Yeah, we'll do it for free. There's no charge. If someone is in a true, people are in hardship, so there's no way we're gonna, contribute to that. We're gonna help. So, anything, yeah, it's a superpower. As I told Brett, it's my cheat code. I can fill out government forms very quickly. I can find them quickly. It's something that you can use me for as a resource, and I extend that to anyone's family or friends. You never know with a small group the impact you can have. It's no problem.
Yeah, and you said, you mentioned that book that you guys send out. You also mentioned to me that you guys have a lot of blogs and articles. We have a blog as well where our advisors here that work with clients are writing personal articles on questions that they have. So, feel free to zoom through Cubie's website, get on our website, check out the articles on there. There's a ton of just golden information in that. We did have a quick question that we can touch on. Does the property tax advice include PACE loans attached to the tax bill? Do you know that?
So PACE loans are put through the county. I would actually have to look at the note, and I don't mind doing that. So my answer is that, you can find me very easily, like our website, or direct message us. As my young clients like, Cubie, I'm sorry if I'm sliding into your DMs with a problem. I don't mind. You can direct message me. I think what's really important is that there's an answer, and it's in my other cheat code, which is to read very boring financial statements and private notes and grant deeds and things like that. I can read them very quickly. If you send me the terms of that PACE loan and you send me a copy of the note, depending on the city and the county, I don't think it does. I want to say that with a 70 to 80% certainty, I would say that they are required to follow the same guidelines as the state. It's the benefit that they had. So they benefited from the fact that they were able to leverage the government to fund their project, right? Because the government's taking on debt so that they can get paid, right? That's what a PACE loan is. But my instinct in real estate law is, and I'm not an attorney, but I do read a lot, is that they have to follow the same guidelines as the property tax, as the property taxes. But I would prefer to actually read a copy of the note before committing, and then also you have to consult with a real estate attorney, and I could actually get you guys, if you needed half an hour or a quick question, I can also refer it to an attorney for free if it's just a one-timer, So
yeah, and if you guys have other questions right now of stuff we just chatted about on this Zoom, feel free to message me right now and we'll go over them. But before then, Cubie, I kind of wanted to just get your outlook. So we touched a little bit on the refinancing and if it's a good time or not, but where do you actually see, the economy or this market going? Do you see there's been a lot of talks about the V-shaped recovery? Is this going to be a Nike swoosh shaped recovery or a W? Well, what's it going to be? What's your thoughts on that?
I'm so excited that I just got to hear about the Nike swoosh recovery, because that's going to become that's great. Wow. Well, luckily you gave me time to prepare, so you kind of warned me about this one, and I'm glad you did, because I will say my reasoning of why I think this is that I'm a very optimistic person, but I think that you can be neutral in these situations. And we actually have been talking a lot with our customers and with our team about neutrality. And there's a really good quote about when it's really tough and you look at some of the best people. There's a couple books I would recommend by Tim Grover. Does one called Relentless, and there's another really good. There's another really awesome book called It Takes What It Takes and it'll come to me. But he was a young guy whose dad was a chicken soup for the soul writer. And now he's a strength and football coach for NFL football players. And he's helped guys like Russell Wilson bounce back from like very devastating losses, like the Super Bowl, you know, and bring them all the way back to success. So his book is It Takes What It Takes. I'm glad I remembered at least the name of his book, but it'll come to me. But the concept of neutrality is really important, because when I tell you that I think it's going to be not a V recovery, but I think it's going to potentially be a W, is the reason why I'm telling people you really want to have an advisor, because also the ability that no one has a crystal ball, but an advisor is doing it all day, every day, so that we can go back and do our jobs. So it's like I tell people, look, all day, every day, I'm looking at home loans. That's my job. There's no way you can dedicate that time. It's not so much that you need an advisor to be the crystal ball. I think that's like the myth that a lot of people think. They're like, well, my advisor doesn't have a crystal ball, so what's the point? And I'm like, the point is that he's pivoting away from situations quicker than you would have pivoted. It's like your coach. They say this a lot in coaching, is like, they call a timeout when you needed one. You know, it's like LeBron James doesn't call a timeout for himself. He would just keep playing, and he would lose the game by 30 points. He'd say, no, coach, I'm good. You know, like, leave me alone. And it's like, no, dude, like, you're not good. I'm calling a timeout, you know? And so really an advisor is there as a coach. Everyone needs one. I need one. You know, our CEO told me the other day, he said, in this economy, it's not going to be what you expect, because it's a true economic crisis. It's a true problem. You know, you have to accept it. Be neutral. You don't have to be positive. You don't have to also, but don't be negative. You don't have to be negative, you know, just be neutral. Just make poised decisions. So that's my positive take on the W economy, that I think it's going to be rocky.
It's a great point. And, you know, I even use other advisors here in the office. You know, I don't personally make all my financial planning and investment decisions myself either. Like, I'm constantly looking up to people that are, you know, partners here or whoever it is to help me make decisions in my own personal life. Because as much as we would love things, me being, you know, a logical person, to boil down to dollars and cents to make decisions, a huge part of finance and real estate and all of these concepts is the behavioral psychology part. And you realizing that we have these biases not only to ourselves but to others that affect this decision making over time. And so while we want to, you know, crunch numbers on all day, and it might make sense, you know, it's always great to get a second opinion from someone else to say, hey, is there any holes maybe in my plan that I'm missing that, you know, you can see and give me advice on. Also got another question here for you, Cubie. Would like to refinance a jumbo residential loan. Is it a good time to do a jumbo now? And I've actually had a couple people ask me that are clients as well.
Oh boy, that is, wow. What's the name of this person? I need to know. Who
Elizabeth.
Elizabeth, you gave me my curveball, but I like it. I like it.
Thank you.
Thanks for unmuting, Elizabeth. No, thanks, Elizabeth. It's actually really refreshing you asked that, because I always try to find, I guess you could say like a cheat code to something, where it's like, I got to be able to do something 100 times to help the most amount of people, right? It's like, I got to find a way to reach the most impact in the economy. So now with the jumbo loan, the only way that I really see a path forward with jumbo loans right now, if I'm being really honest, is first of all, truly assessing what kind of loan you have. People say, oh, I have a really clean loan. I'm like, okay, well, define clean. Okay, I'm going to define a clean loan very specifically. A jumbo loan, first of all, is a loan above $765,000 in a high-cost metropolitan area only. A jumbo loan is a loan over $510,000 in the counties of outside of high-cost areas. Outside of Orange County, an example would be Riverside County or San Bernardino County. Los Angeles and Orange County would be the $765,000 mark. And then in those counties, the jumbo mark goes down to $510,000. So that's the first thing, is to identify, do you actually have a jumbo loan? I'm assuming you do. I'm assuming you know that. The next thing to determine is your FICO score. Jumbo loans right now are being extremely prejudiced, and you have to be around 760 FICO. Maybe 720 is okay. In reality, with a jumbo loan, the market is so volatile that one of the only banks, and I'm about to send them a lot of business right now, maybe, and that's okay with me because they've done right by the broker community. But I do have a recommendation specifically if anyone wants a specific name of a loan officer, that's fine. But I would say that Citibank is, in my opinion, they're not going to approve every loan, but if you do a jumbo loan right now and you must refinance, I would actually refer you to that specific bank for people who are in a position to do so. Now, why not the other banks? Specifically, actually, because Chase and Wells Fargo have taken a position that in many channels, they're charging 1% origination across the board on all loans for like a risk overlay. I'm kind of giving you guys a bank tip right now because I do have a lot of friends in the banking industry, a lot of loan officers in banks. Even though I'm a mortgage broker, they're retailers, it's different. Yes. They're telling me that the bank data internally is not looking good for jumbo loans. That they're taking, there actually is a high level of default right now. So, you know, default rates, right, you know, like I mentioned earlier in the conversation, we're up from 3 to 6%. Homeowners are not living below the poverty line. You know, first, COVID affected people who were living below the poverty line. That was 75% of the people initially. Now you are seeing it affect homeowners, which are people who are not living below the poverty line. They're mostly middle-class people. So that's my recommendation. And if you can't get one of those loans, we do have an awesome backup plan. And I would say that I never want to lie and say I'm the best choice, but I would say that I do have an awesome backup plan where you can get probably a 2.9 30-year fixed up to $765,000. And then we have a partner with a credit union that like us, because we can do the first loan, and then we partner with the credit union, and that rate can be as low as 3.75 and goes up to about 4.5%. So, but that's splitting up your loan.
Oh,
so instead of you having one, yeah.
Very interesting. Thank you. Maybe I should call you.
That's fine. Yeah, it's getting into more technical stuff, but you can call me anytime. I really appreciate it.
Okay.
Yeah, we'll put his information too whenever we blast out the video too. If you're on our GK mailing list, Elizabeth.
I am part of GK.
Awesome.
So much.
Part of the family. And so yeah, just wanted to. I think that should be all the time that we have right now, Cubie. If you had any like final thoughts or anything, please do reach out if you guys have any questions for us specifically. That's maybe specific to your situation. Maybe you're looking to take those couple steps to start saving up for your down payment. Maybe you're almost there. And you need to contact Cubie, whatever it is, please view us as resources. We're a completely independent firm, so we can give you objective opinions. We're also fiduciaries, so we have a legal obligation to do what's in your guys' best interest. We'll put all Cubie's and mine info on there, but really appreciate you guys tuning in today. We've been doing a lot of these live streams, so make sure you guys are following us on Twitter. I'm at Sifling Trades, or on Instagram, I'm at Sifling. We're putting out a lot of information on there as well. And Cubie, what's all of your socials?
Well, everything is almost just Loan Brothers. We have a company, it's Mares Mortgage. People tend not to remember that Mares is my grandmother's maiden name. So we named our company after our grandma, but Loan Brothers is so people can kind of more remember us. So Instagram is Loan Brothers, and then the website is loanbrothers.co, so .co. So you can find us anytime, either there. We're very highly responsive. You can talk to Christian. We sound the same, so don't be surprised. He's my younger brother, but we're kind of like twins, so there's no difference. You can also, we have a strong team of like about 3 or 4 other people on our team, and they follow the same philosophies as us, so there's no difference. So thanks a lot. Thanks, Brett.
See everyone. Hope you have a great rest of your week, and be safe and continue to be healthy as possible.
Yep. Thanks a lot. Have a good day, everyone.
Cheers.
Okay.